This is our September 2023 real estate market report by the CK team. Our current inventory is at 3,881 homes for sale, and this is a decrease from what it was last year. Our interest rate have gone up though at 8%. Last year it was just at 4 or 5%. Our prices at $447,000. There's not much difference from last month or last year. So this definitely is counter to what they were predicting from last year, that because of interest rates going up, the demand goes down. That's not true at all. There is big demand for housing right now, and resale homes are selling. We are definitely seeing a lot of resale homes getting multiple offers, our listings included. New homes are very competitive too. They've been doing a lot of quick move-ins like the one we have right now. They're doing a lot of lender incentives, like if you purchase with them, they're gonna give a even lower interest rate and sometimes lower price that you could negotiate with. Then on the other topics of this video, we're gonna talk about how new homes mortgage rates are affected versus how it was in resale, how mortgage are going to increase or decrease, and the topics of property taxes. So, giving you Rene.
All right, so let's talk about mortgage, and more specifically the parts of a mortgage. Mortgage is broken down into 4 parts, and they are the principal, the interest, tax, and mortgage insurance and insurance premiums. Each time you pay your mortgage, part of the mortgage goes into these 4 parts. The principal and the interest goes to the bank. The tax and the insurance goes to an escrow account that was set up by your lender. Now, the property tax is paid out in 4 installments. They are on the 3rd Monday of August, 1st Monday of October, 1st Monday of January, and 1st Monday of March. And while the insurance premiums gets paid out annually, and typically that's at the time of renewal. Now, the property tax and insurance can increase year over year. Property taxes can go up to 3% higher on a primary home, while 8% or up to 8% on an investment property. Hazard insurance can increase due to calamities, natural disasters. That's all I got. Let's hear it from Jose.
So you decided to buy one of these houses right here. So you go to your loan officer. Your loan officer gives you an initial disclosure. Initial disclosure contains expenses, balances. Also, it includes your monthly mortgage. Now, a week before getting the keys to this house, you get another disclosure, which is called the closing disclosure from your loan officer. And now you look at it and your monthly mortgage is actually lower. So you go and pay your first mortgage and it's actually the same as as what it states in the closing disclosure. But few mortgages later on, your mortgage payment went up. So what happened between the first mortgage to the mortgage you have now? Well, property tax happened. So what happens is when you get your initial closing disclosure and your first mortgage payment, the property is actually taxed as a dirt lot. But when you sign your paper, the title company sends all your forms to the Clark County. Now they're registering you as owner, and it's also saying that now there's a house in the property. So what Clark County does is now they send a personnel to reassess the property, and now they see that there's a house in the property. So now you will be taxed as such. So how is the tax calculated? It's actually a 0.91% of your purchase price. So that's what you pay yearly, right? 0.91% of your purchase price, and then they divided that into 12. Then they put that into your mortgage. So that's why you see those increase on your monthly mortgage payments. So this is all from the CK team. Thank you for watching for another educational video. On our next video, we will be talking about how to purchase a solar panel.